Okay, so good evening everyone. For today's topic, we will be discussing what is quality control. So sabi, operating flawlessly is the key goal of quality improvement programs. So syempre, if gumagawa tayo ng financial audits or any activity sa businesses, mas maganda na kumikilos or gumagawa tayo ng maayos para mas magkaroon ng magandang quality yung ating programs. And syempre, mas malaki yung chance na ma-achieve natin yung goals and objectives natin as an internal auditor. So what is internal auditors? Internal auditors are in the quality of business. They evaluate the design of processes to determine if the structure is conducive to success. So ayun nga, internal auditors, syempre as an internal auditors, sa kanila dumadaan lahat ng financial audits. And syempre, sila yung nag-check nito if may risk ba. Sila yung nag-evaluate ng design of processes para malaman is tama ba yun and if conducive siya to success. And syempre, if hindi nila yun ma-check ng maayos and may makaligtaan sila, mas malaki yung chance na mag-fail yung ating operation. Next, they evaluate how processes are functioning to determine if they are operating as intended. So, syempre, after nila i-evaluate yung design of processes, evaluate naman nila if nagpa-function ba yung structures na yun or yung financial audits natin. So, the focus of internal auditors is the achievement of objectives. So, first, consistent execution with minimal errors. Syempre, ang pinakamagiging main objectives talaga nila is to execute nang walang mali or at least minimal errors lang. And then next, minimal use of input given production levels. So, syempre, i-aim nila na magkaroon ng maximum productivity with only using minimal resources. And then next is stability over time so the process is sustainable. So with these objectives in mind, quality control concepts and practices provide a solid foundation to build upon. So there are several methodologies in place, and some of their underlying tools, techniques, and methodologies were already introduced in Chapter 6 and 7. So in this chapter, we will examine some of the methodologies that bring these elements together and facilitate the creation of high-quality, high-performing organizations. So we will now proceed to the understanding assertions and using quality improvement methodologies. So internal auditors are in the quality business. So when we take a close look at what we do, it becomes apparent that our focus for decades has centered on the examination of programs and processes to determine if transactions are executed according to certain parameters. So we can usually summarize our transaction testing by asking were all or it pertains to completeness transactions processed according to the requester's instructions or if it is accurate, and were these transactions consistent with necessary business purposes if it is approved. So we can add other criteria also in the form of financial statement assertions commonly used for financial reporting. So what is assertions? Assertions are affirmations or declarations. They are statement of fact regarding the financial activities of the organization. So very understandable naman po yung meaning ng assertions. So here are some management assertions example. So first we have the validity. The transaction exists and the amount is not overstated. So, dito, syempre, i-make sure nila, i-assert nila if yung transactions ba na nilagay mo is talagang nag-exist. And of course, syempre, yung amount na ilalagay mo is make sure na it is not overstated nor understated. Next is completeness. All transactions were recorded without omissions. So, syempre, completeness. Titignan mo if yung transactions ba is na-record mo na lahat and walang kulang. Next is cut-off. Transactions were recorded in the corresponding period. So tayo usually nagre-record tayo ng financial statements yearly. But the transactions yung transactions or yung events sa journalizing, nire-record natin siya sa mismong date kung kailan nangyari yung events. Next is valuation. Balances are valued accurately and the amount is neither over nor short. So dito naman, ina-assert nila if yung balances ba ay na-record siya ng tama and yung amount is hindi siya sobra and hindi rin siya kulang. Next is recording. Transactions are recorded at the proper amount. So yun din yung sinasabi natin kanina. When you record transactions, syempre dapat proper amount yung ilalagay natin. Next is presentation. Amounts are presented with the corresponding disclosures. And last is existence. Assets and liabilities exist. So, marami pa pong management assertions, but dito, ayan lang yung ilan sa mga examples. So, there are three main categories related to transactions, balances, and presentation assertions. So, first, you have transactions and events. Occurrence, the business transactions recorded actually took place. So, dito, tinitignan nila if yung naka-record ba na transactions is talagang meron at hindi lang siya basta ni-record or ginawa-gawaan. Completeness. All business events and their related transactions that should have been recorded were recorded. So tulad nung sinabi natin kanina, when you say completeness, dito naman ina-assert nila if lahat ba ng business events is naka-record or lahat ng transactions is naka-record. And then accuracy. The transactions were recorded in the corresponding ledgers at their full amounts without errors. So dito naman titignan if yung transactions ba naka-record siya sa tamang ledger at syempre dapat kasama din yung kanilang full amounts without errors. So for example, lahat ng cash items is dapat naka-record siya sa cash ledgers and of course dapat lahat ng amounts nila is naka-record din. Kasi once na may hindi sila na-record, magkakaroon ng error and magtutuloy-tuloy yun hanggang matapos yung financial statements. And then cut off. The transactions were recorded in the appropriate accounting period, neither early nor late. So dito, sabi kanina sa cut off, dapat kung kailan nangyari yung transactions or yung events, doon din natin siya i-record. And syempre, as of financial statements, nire-record, ginagawa natin siya yearly, it's either periodically or perpetually. And then classification, the transactions were recorded in the appropriate general ledger accounts. Second is accounts balances. So existence, assets, liabilities, and equity balances exist as shown. And then rights and obligations. The organization has right to the assets it owns and is obligated as indicated in the outstanding liabilities reported. Siyempre, as an organization, may karapatan sila sa lahat ng assets and also they are obligated sa kanilang corresponding liabilities. And then completeness. All reported asset, liability, and equity balances that should have been recorded were recorded. And then valuation. Asset, liability, and equity balances are valued and recorded at the proper valuation and all adjustments were recorded appropriately. And then presentation and disclosure. Occurrence, the reported transactions and disclosures occurred, and then rights and obligations, that transactions and disclosures are related to the organization. Completeness, all disclosures that should have been disclosed were disclosed in the financial statements. And then classification and understandability. Financial statements are clear, understandable, and present all necessary information appropriately. And then accuracy and valuation. All relevant information is disclosed at the appropriate amounts and reflect the proper value. Dito, makikita rin natin that there are some duplication in the assertions across those three types. So this occurs because each type is intended for a different financial statement or purpose. So yung transactions and events is relate siya to the income statement, while yung account balances relate siya to the balance sheet, and then the presentation and disclosure naman is relate siya to the disclosures that accompany the financial statements. We will also notice that when performing an operational audit of a government or research program, a construction project, or how an educational institution operates, most of these assertions apply. So for example, yung occurrence, accuracy, completeness, classification, and valuation are very important considerations, and many organizations have had serious problems by failing to meet these expectations. So when we broaden our viewpoint and perform operational reviews, the objectives and criteria tested to that tested to determine if the program or process is operating well also require an examination of the 7 E's, yung economy, efficiency, effectiveness, ethics, equity, ecology, and excellence. First, we have economy. The program or process obtains resources at the optimal value to the organization. So this is accomplished through the display of care in the procurement of financial, human, or material inputs. So in acquiring and using of resources, frugality and thrift are important. But this should not be confused with being cheap and focusing disproportionately on price. Total value should be the goal, and for many items, that means looking beyond price and including consideration of quality, warranty protection, and the return policy, among others. This means purchasing items as close as possible to when the item will be placed in productivity use. Next is efficiency. The program or process operates in such a way that it achieves maximum productivity with the lowest possible wasted effort, expense, or time. It only suggests that goods and services are produced without wasting time, energy, or materials. So, the focus needs to be on the integrated systems of people, materials, machines, money, knowledge, energy, and information. When all of these elements are applied simultaneously, the process, system, or organization will maximize its production while minimizing its need for inputs. A great deal of efficiency can be achieved by eliminating waste and rework. Sustainable efficiency gains and are achieved through continuous assessment, monitoring, and controlling of resources, modifying operating procedures, and, when necessary, redesigning operations related to the production of goods and services. Furthermore, it is also requires examining job design and workplace layout. Next is effectiveness. The program or process achieves or exceeds its objectives. Effectiveness pertains to the achievement of desired results. So if the program or process under review does not have clearly defined objectives, it is essentially impossible to assess effectiveness other than anecdotally. So during the planning phase pa lang, internal auditors must consider the objectives of the activity being reviewed and the means by which the activity controls its performance. So without clearly defined goals, it is very difficult, if not possible, for the auditor to define the criteria that will be used as the basis for verifying the adequacy of the performance. So while this E relates to effectiveness and the basis for the assessment, the lack of clear objectives has wider implications for the entire audit and the possible lack of clear sense of mission within the unit being reviewed. Next is ethics. The operation acts in accordance with acceptable moral principles that govern the organization's behavior. The rules of behavior must be outlined in policy documents and supported by the organization's culture and reinforcement mechanisms such as performance reviews and compensation programs. So internal auditors must assess and make appropriate recommendations for improving the governance process in the promotion of appropriate ethics and values within the organization, and evaluate the design, implementation, and effectiveness of the organization's ethics-related objectives, programs, and activities. Next is equity. The program or operation acts in ways consistent with expectations of equality and fairness when dealing with individuals or other organizations. Internal auditors generally default to compliance considerations when examining matters related to equity. In terms of people, there are many laws protecting individuals against discrimination and avoiding both disparate treatments through overt discriminatory motives and behavior, as well as the adverse impacts caused by the employer practices. Next is ecology. The operations activities protect and promote protection of the natural environment. So the main driver for ecological stewardship tends to be compliance due to laws and regulations that limit the environmental impact of business activities such as the Clean Air and Clean Water Acts, waste management and contaminant cleanup, chemical safety and resource utilization regulations. So the three R's are very helpful formula to improve this organizational stewardship. So, yun yung reduce, reuse, and recycle. Next is excellence. Excellence, the program and related activities adhere to the highest possible degree of quality and seeks near zero error rates as much as reasonably possible. A cultural attribute of high performance companies is that they have an orientation toward excellence in what they do. This is influenced by setting performance expectations and having monitoring mechanisms in place. But excellence is more than that. It is a state of mind that compels workers to do things right from the first time. It should be a core value of every individual and organization, supported by effective training and development. It is also the result of employees having high motivation and feeling personally invested in the organization's future. Financial statement assertions. Financial statement assertions are made as of the last day of the organization's fiscal year and are made retrospectively. This means that as of the last day of the fiscal year, the balance sheet shows the condition of the organization in all material respects and its status is reflected accurately as it pertains to assets, liabilities, and equity. All of this is should be achieved consistently. So yun yung economy, efficiency, effectiveness, ethics, equity, ecology, and excellence. They must achieve daw consistently. On that same last day of the fiscal year, the statement of cash flows and the income statement reflect in all material respects the transactions that took place during the entire fiscal year, and all relevant amounts are classified correctly as shown on the reports. All of these assertions related to the financial statement pertain to a date in the past. Operational objectives. We don't refer to them as assertions since the term is reserved for financial statements. Operational objectives are made with broader, more balanced viewpoint, retrospectively as relates to past activities to report on past practices, and prospectively related to the future implications of these practices. When these operational goals are seen from that perspective, it becomes apparent that the auditor is evaluating the program or process ability to execute flawlessly in the future. So doon na ulit papasok yung operating flawlessly is the key goal of quality improvement programs. So now we will proceed to the link between process weaknesses and internal control. Many people think of internal controls as getting in the way and impeding work from getting done. So ayan na yung sinasabi nila na kapag narinig nila yung internal control or internal auditors, sila na naman yung makahadlang para matapos yung trabaho. Sila yung mga maraming pinapaayos or maraming pinapabago. Pero the reality is quite the opposite. Unchecked risk can derail the achievement of objectives. So, syempre, if may mga hindi na-check na risk, hindi nakita, and marami pa palang errors, mas mapapatagal lang yung trabaho mo, and by mitigating the likelihood and/or impact of these negative events, objectives are actually more likely to be achieved. So if mapacheck mo sa internal controls yung mga ganitong risk and makita nila na okay na yung trabaho mo, edi mas malaki na yung chance na ma-achieve nyo yung objectives nyo. And then linking operational results to financial health. Since there is such a strong link between operational results and financial health, internal auditors should remember that as per the definition of internal auditing, the objective is to help our clients achieve their objectives. So this process, which is very similar to the process improvement and consists of the following. First, where do we want to go? So, where do we want to go? Dito natin tinitignan yung ating visions and objectives. And then, where we are now. Dito naman yung ina-assess natin yung audits natin or dito yung assessments. And then, how do we get to where we want to be? Siyempre, dapat magkaroon tayo ng process improvement. And then, how do we know if we are making progress? How do we monitor progress? Through metrics and critical success factors. So, COSO states that internal control is a process effected by an entity's board of directors, management, and other personnel designed to provide reasonable assurance regarding the achievement of objectives relating to operations, reporting, and compliance. These internal controls are geared to the achievement of objectives. It consists of tasks and activities and adaptable to the entity structure, from the entity to its operating units and business processes. Internal controls are Internal controls enable the achievement of operational objectives by helping to mitigate the risks that can jeopardize the achievement of those objectives. So in this unfortunate, however, that many people think of internal controls as getting in the way and impeding work from getting done. The reality is quite the opposite. Unchecked risk can derail the achievement of objectives. So by mitigating the likelihood and or impact of these negative events, objectives are actually more likely to be achieved. So yun na po yung inexplain natin kanina. So another important point is that processes are a series of actions taken toward a purpose. So without an end, process don't have any meaning. They become busy work characterized by erratic actions that consume time, financial and material resources, and wear out equipment unnecessarily. Employees should engage in activities within a process because the series of actions and steps will be orchestrated so as to achieve a goal. Internal controls then support existing processes by helping to protect the organization against risks that threaten the achievement of objectives. Formally documenting, establishing responsibility and accountability to perform these activities, and ideally linking the performance of these controls to the organization's rewards mechanism will go a long way toward making sure that negative events are held in check. Next, we will proceed to Six Sigma and Lean Six Sigma. Six Sigma is a process improvement methodology designed to make sure that a process will deliver its output within a prescribed tolerance range. It is a business and process improvement methodology used to improve processes by using statistical analysis to identify the sources of error and determine the best way to eliminate them. It is a collection of management tools and methodologies to reduce variation, errors, and increase the speed of execution while focusing on eliminating mistakes, rework, and waste. So Bill Smith introduced Six Sigma at Motorola in 1986. Jack Welch further cemented the program by introducing it, promoting it, and making it a key aspect of his business strategy at General Electric in 1995. DeFeo and Barnard indicate that by the late 1990s, about two-thirds of Fortune 500 companies had Six Sigma initiatives in place. Mike Harry and Richard Scoveder define Six Sigma as a business process that allows companies to drastically improve their bottom line by designing and monitoring everyday business activities in ways that minimize waste and resources while increasing satisfaction. So, the term Six Sigma is based on statistical modeling whereby the maturity, stability, and conformance with expected accuracy yields is described by a sigma rating. So, this yield relates to the percentage of total production that is defect-free. The ratings are as follows. So, ppm relates to the number of parts per million out of specification. Itong pong ppm or number of parts per million. So it represents the number of defects per million or defects per million opportunities or yung DPMO. So the table shows that at 6 sigma, ito po yung pang 6 sigma, a process has 3.4 DPMO or conversely 99.99966% of all opportunities to produce are statistically expected to be free of defects. So to illustrate the high quality Six Sigma represents, let's consider a process where the auditor selected a random sample of 50 transactions representative of the population for testing. 5 of the 50 transactions tested are found to have a reportable condition, so there is a 10% error rate. By extrapolation, that means whether to be 100,000 defects per million, which puts the sigma level between 2.7 and 2.8 sigma. So, paano nakuha itong 100,000 defects per million? So, here is the formula. Total number of defects in a sample divided by the sample size times the number of possible defects and multiply the answer to 100,000. So, yung total number of defects, yun po yung 5. And then, i-divide natin siya sa sample size. Yun yung 50 transactions representative. And then, i-multiply natin siya sa number of possible defects. So, yun yung, so wala naman siyang wala naman siyang given na number of possible defects. And then, multiply the answer to 1 million. So, 5 is i-divide natin siya sa 50. Doon nakuha yung ating 10% na error rate. Ayan yung mag-i-equal sa 0.1 or yung 10% error rate. And then multiply ulit natin siya by 1 million. Doon naman nakuha ang ating 100,000 na defects per million. Okay, so based on this information, it is evident that Six Sigma process is one where it is performing at near zero error rates. So it is important to note, however, that given the limited resources available in many organizations that can be allocated to quality improvement, it could become prohibitively expensive to achieve precision at the Six Sigma level. So furthermore, it is really necessary to use the Six Sigma process. If the consequence of a slightly higher error rates is tolerable, cost-benefit considerations would make it unnecessary or outright unwise to spend those limited resources in that way. This does not constitute a license to accept mediocrity. It simply means that organizations must allocate limited resources, and this must be done judiciously based on cost-benefit considerations. Despite this, organizations should create a general culture and related operating practices where the pursuit of excellence and perfection is constant and efforts are made in the most cost-effective and pragmatic way possible to reduce error rates. Management should determine an appropriate sigma level for their most important processes and work toward achieving it. Six Sigma is to be used to further the organization's goals and objectives, and is a mean to an end, not an end to itself. So, the purpose is to increase the effectiveness of the organization by identifying and removing the causes of defects. The result is better functioning processes that are more efficient and have near zero error rates, so quality improves. There is a widely held misconception that Six Sigma is only applicable to manufacturing organizations. But that is incorrect. Over the years, Six Sigma has also been applied to service organizations with positive results. The reason is that tools and techniques are applicable in any environment where processing activities are performed. Whether it is manufacturing or other business processes, both have characteristics that can quantified, measured, analyzed, and improve upon. These characteristics can and should be controlled as well to improve consistency and predictability. So Six Sigma relies heavily on statistical methods, but it also creates an infrastructure of subject matter experts who are experts on the methodology and tools. Each project follows a defined sequence of phases and steps that aim to reduce errors, improve customer satisfaction, reduce cycle time, reduce pollution, or minimize rework. So this is achieved through efficiency and near zero mistakes based on some guiding principles. First, good processes generate good results, and then it is imperative to go see for yourself to fully understand the current situations. Siyempre, mas importante din or mas mahalaga na ikaw mismo yung nakakakita para malaman mo or mas maintindihan mo yung sitwasyon na nangyayari. And of course, speak with data managed by facts. So, syempre, we are relying heavily on statistical methods. So, we are basing on some data. So, syempre, mas ma-achieve natin yung customer satisfactions if nakikita nila na may pinagkunan tayong data or manage tayo by facts. And of course, hindi lang natin siya kinuha kung saan-saan or hindi lang natin siya basta-basta ginawa. And then take action to contain and correct the root cause of problems. So, syempre, importante din na gumagawa agad tayo ng paraan para makorek agad yung mga problemang nag-occur. And then work as a team, very, very important principles din yan. And then quality is everyone's business. So what is DMAIC? DMAIC stands for Define, Measure, Analyze, Improve, and Control. DMAIC is the most common methodology in Six Sigma. So D stands for Define the current process, system, high-level project goals, and high-level project goals and capture details about customer requirements and expectations. So example is the voice of the customer. And M stands for Measure Key Aspects of the Current Process, collect relevant data, and determine the capability of the process in its current state. So, ito yung the as-is process capability. And then A for Analyze the data to investigate and verify cause and effect relationships, determine what the relationships are, and search for the root cause of the defect under investigation. And then I stands for improve the current process based on the data analysis performed. Use techniques such as design design of experiments, pokayok or yung mistake proofing and training, update procedures, documentation, and apply change management procedures to create an improved process. Consider the use of pilot programs during the rollout and to evaluate the new process capability. And then control the future state process to ensure that any deviations from the performance targets are corrected before they become defects. Implement control system to monitor performance, such as statistical process control and continuous monitoring procedures. Note that in Six Sigma, the word control has a slightly different meaning, while internal auditors associate the word with practices that reduce the likelihood and/or impact of risk. In Six Sigma, it relates to the activities that would indicate the process of performing as defined or not. The activities help to mitigate negative outcomes, but they go further because the entire phase is designed to prevent the process from reverting to the initial state where the Six Sigma team intervention was required in the first place. So, DMA-DB or DPSS designed for Six Sigma. In general, the DMAIC methodology is used for existing processes, while DMA-DB or DPSS is used when building a new or highly modified processes or product. So, DMA-DB stands for Define, Measure, Analyze, Design, and Verify. DFSS is designed for Six Sigma. This stands for define design goals that are consistent with customer needs and wants and verify that these are aligned with the organization's strategy. And measure and identify those characteristics that are critical to qualify for the customer. Measure product performance capabilities, measure production process capability, and identify and measure risk, and then analyze available information to develop and design alternatives, and then deeper design an improved alternative to the existing product or process that is most appropriate given the analysis performed by optimizing the design, plan for design verification and run simulations if possible, and then verify that design meets customer and business requirements, set up pilot runs, implement the production process, and transition the process or product to process owners. So, a key objective of Six Sigma is minimizing variability. So, variability refers to the degree to which results differ from what was expected. It has to do with how much results can vary or change. So, this is generally not a desirable outcome for a process since predictability and consistency of results is better. In fact, identifying and communicating variability is the key concept driving the formulation of internal audit findings. The difference between the performance criteria of a program process and the condition the auditors identified through audit techniques while performing a review. Hence, the goal of Six Sigma and the goal of internal auditors to report deviations from the expected practice are similar. At a consultative level, internal auditors are tasked with identifying opportunities to improve business processes, and here again, Six Sigma can help internal auditors. ISO 9000 and ISO 31000. So according to the ISO 9000 family of standards address various aspects of quality management. ISO provides a great deal of guidance on almost all aspects of technology and manufacturing. The guidance and tools available are helpful for companies and organizations who want to ensure that their products and services meet customers' requirements and that quality is improved consistently. So standards in the ISO 9000 family include ISO 9001:2015. It sets the requirements of a quality management system. ISO 9000:2015 addresses the fundamental concepts and language. ISO 9004:2009 focuses on how to make a quality management system more efficient and effective. ISO 19011:2011 provides guidance on internal and external audits of quality management system. So ISO 9001:2015 establishes the criteria for a quality management system, and it can be used by any organization regardless of its size or field of activity. According to the ISO website, there are over a million organizations in over 170 countries that are ISO 9001 certified. These standards is based on seven quality management principles, namely customer focus. The primary objective of any organizational activity should be to meet or exceed customer requirements and expectations. So organizations exist because of their customers, so they must identify, attract, retain, and please their customers. Organizations that understand this achieve higher levels of customer satisfaction, loyalty, repeat business, increased sales, and bigger market share. Second is leadership. Leaders establish unity of purpose, set the direction of the organization, create the conditions, and promote the practices that result in meeting the organization's quality objectives. Leaders align the organization strategies with the organizational structure, establish policies, build processes, and assign resources effectively to achieve its mission. Engagement of people. Knowledgeable, engaged, and empowered workers are essential for the creation and delivery of value to stakeholders. Competence is fundamental to the effective functioning of any organization. But beyond competence, employees at all levels must be involved and respected. Next is process approach. When activities are designed, understood, and managed as part of a coherent integrated system, it is more likely that the organization will achieve consistent, predictable results. Next is improvement. Winning organization Winning organizations embrace the concept of continuous improvement. Inertia can be dangerous in today's world, so the organization must constantly examine how they are structured and operating, identify and react promptly and effectively to both internal and external changes. So, by focusing on early identification of changes and applying root cause analysis to understand the triggers of these changes, organizations can anticipate and react appropriately to changing conditions. Next is evidence-based decision making. Desired results are more likely to be achieved when decisions are data-driven and based on the careful analysis of information. When cause and effect relationships are understood, the organization will be more likely to make better decisions. Excessive subjectivity and the inability to justify decision making often results in opinion-based decisions, politicized practices, and a general inability to demonstrate effectiveness of decisions. Last is relationship management. For long-term success, organizations must manage their relationships with their stakeholders, especially suppliers. So organizations don't operate in a vacuum, and as such, they must manage the impact that their stakeholders have on them. Opportunities and threats may arise from the pool of stakeholders. Quality-related risks may be caused by vendors, shipping companies, or distributors. In general, vendor problems can disrupt the organization's supply chain. What are the implications for internal auditors? So, the definition of internal auditing states that internal auditing is designed to add value and improve an organization's operations. It helps an organization accomplish its objectives. So internal auditors do this by defining the scope of their review and developing a risk-based audit program during the planning phase. Later, during the fieldwork, they test the structure of programs and processes, the transactions performed within those programs and processes, and interact with the operators working within those structures, programs, and processes. So, the ISO quality management principles provide a useful baseline to examine the structure, conditions, and practices within the designated scope area to determine if the criteria are sound and if the practices are conducive to successfully meeting the expectations of the organizational stakeholders. Internal auditors can use the principles and the aspirational tenets within them to construct audit programs that probe for the presence and functioning of the mechanisms that will enable the program or processes to achieve them. So now we will proceed to Chapter 9, Documenting Issues. So what is findings? Findings given the discrepancy between what is expected and what is actually in place, as discovered by auditors during the course of their work. It provides the details about the anomaly and is determined as a result of the procedures performed by the auditor. So, when conditions meet the criteria, the auditor's communication can indicate that the performance was satisfactory. In some organizations, the term finding has been replaced by other labels, such as opportunities for improvement or observations. In other organizations, the term is still being used, but it is reserved for the more serious items, while medium or lower risk observations are labeled or observations. So CCR model for um, documenting audit findings. So first, we have criteria. The criteria are the performance standards or expectations set by relevant stakeholders. The criteria are used in making the evaluation or verification and consist of the expected performance. So when performing financial reviews, the criteria would consist of relevant accounting and financial standards that dictate the recording of transactions for financial statement purposes. Criteria can also be established through external expectations like those encapsulated in government laws and regulations. So the criteria consists of what should exist, the correct state. Second is the condition. The condition refers to what the auditor discovered as a result of applying auditing procedures. It is the factual evidence that the internal auditor found during the interview. Internal audit procedures include gathering testimony, reviewing documents, observing the work conditions and dynamics, and performing calculations of important figures where applicable. So, the criteria are what should be in place, while the condition it is what is in place. The finding exists because there is a difference between the criteria and the condition. What is happening is not what should be happening, so this creates a deficiency that warrants reporting. The condition is current state. Third is the cause. The cause is the reason the condition exists. So the cause explains why there is a difference between expected and annual conditions. Getting to the root cause of a problem is not always easy. So this is the crucial part na ng CCER model for audit findings. And then there are some tools that are particularly suited to help auditors get to the root cause of problems. So first, 5 whys. Ask why until you get to the root cause of the issue. Second, cause and effect diagram. It is also known as fishbone diagram. It creates a diagram to show visually all the possible factors creating the issue to see where the problem may have started. And then last, drill down. Break down the condition into smaller parts to gain a better understanding of the larger picture. This could also involve data analysis. Next is effect. The effect constitutes the consequence of the condition identified. It relates to the risk of exposure the organization, program, process, or others will face because the condition is not consistent with the criteria. The effect is the impact resulting from the problem itself. A helpful approach to document the appropriate effect and to make sure that the auditor has in fact identified a finding worthy of being included in the report is to ask, so what? Why would anyone care about this condition? It is extremely helpful to the auditor for the auditor to quantify as much as possible the effect of the finding. So, if the auditor is unable to articulate the consequence of the finding, the auditor may also have difficulty convincing the auditee that there is, in fact, a problem that warrants their attention and correction. So, furthermore, being unable to verbalize the consequence will often identify a preference on the part of the auditor rather than a real problem. Next is a recommendation. The recommendation is the action or collection of actions that is successfully implemented will neutralize the cause, stop the effect, and restore the condition to the desirable state. So, the effectiveness of the recommendation will depend on the auditor fully capturing the details about each of components of the CCCR model. By elaborating sufficiently on each of the components, the finding will be convincing and compelling so that the reader comes to the same conclusion as the auditor who identified the efficiency. So it should be cost effective when correcting the problem. It should also consider the principles of effective processes when making considerations. Making findings and recommendations persuasive. So findings and recommendations will be persuasive to the extent that they convince the reader that there is a real problem that requires correction. This can be achieved through a number of actions. First, quantify as much as possible. So when internal auditors write reports and fail to provide data that support their arguments, the reader is left wondering whether there is really a problem. So next is make sure the findings are significant. Since organizational management is increasingly dealing with complex and worrisome risks, to managing large volumes of transactions and monetary amounts and faces constant time limitations, they should not receive audit findings pertaining to minutiae. And then, consider the cost-benefit involved. Every activity carries some risk, and organizational leaders understand there are some costs of doing business. These risks can be excessive because they come in conflict with the principle of prudence and fiduciary responsibility to protect the interests of their stakeholders, especially owners. So next is use appropriate language. Traditionally, internal audit reports were lengthy, contained numerous acronyms and jargon, and use of secure and complex language that made it difficult for some report readers to comprehend. So, it has become apparent that this practice is counterproductive since the purpose of writing a report is to communicate the conditions noted during the audit and convince management to take corrective action when necessary. So, comprehension level of audit report recipients. First, we have use a readable report format. So, audit reports formats have changed and many organizations are now submitting 1 to 3 page reports. So, since audit report recipients typically don't have a lot of time available, they cannot read lengthy reports. So, by making the format simple using color, bullets, graphs, and diagrams, it can make it easier and faster for readers to follow. Next is order of importance. Internal auditors should carefully examine the totality of the findings presented in the report and make sure they are presented in order of importance. So, more significant findings should be presented first and the remaining issues in descending order. Next is compressing findings. Audit reporters are getting shorter. One of the ways to accomplish this is to compress the findings. This means consolidating some findings so there are fewer in total. This practice does not eliminate the findings, it merely groups them. Next is too lengthy. Similar to the observation related to the length of the audit report, sometimes the length of the finding itself is excessive. Findings should be succinct with losing any necessary details. So internal auditors should be careful not to elaborate excessively on the issue or provide unnecessary details. Next is proper tone. Some internal auditors forget that purpose of most internal audit reports is to convince the reader to take action, not to be accusatory or demeaning to those whose actions fail to meet performance expectations. So we will now proceed to using quantitative methods to improve the quality and the impact of the audit findings. So few things with facts when the objective is to argue for a particular course of action. When internal auditor collects reliable data performs appropriate analysis and formulates conclusions based on these related facts, it is difficult for others to contradict or ignore the communication. Auditees may dislike the results or the implications, but a reasonable person cannot negate the truth. The veracity of auditors' work is based on quantitative information anchored in reliable data. This quantitative approach to documenting results will improve the impact of the audit findings. More qualitative elements can be included as well, but they may not carry as much weight and could be subject to audit challenges. So to address this, internal auditors are encouraged to collect objective information to support subjective matters. And then persuasion on the basis of fact or reason. When this is used, the process is based on the fact that people believe they are logical and reasonable. Persuasion can also be achieved by appealing to the character of the presenter. This approach is based on the character of the presenter, who must be trustworthy, honest, intelligent, or otherwise credible. And then persuasion based on emotion. Persuasion is based on expressing feelings on a subject, getting an emotional reaction, or both. Persuasion and diversion. As much as internal auditors should know how to increase their ability to be persuasive, they should also remember that sometimes audit clients want to persuade the auditor as well. So, auditors should know about some of the techniques used to persuade, distract, and divert their attention. So, first, we have repetition. Repetition, by repeating an argument often enough, the perpetrator hopes that the frequent repetition creates legitimacy. Some do this with distorted and untrue statements because someone says it many times that doesn't make it true. Second, will of the majority. Another approach is by representing one's argument as if it were the will of the majority. This gives the person's argument the aura of legitimacy. If that were so, then the mere fact that many people share the same knowledge or opinion would lend it credence, but if that is fabricated, then it is done with the intent of deception. Next is generalization. Making unwarranted generalizations that represents one's behavior as that of the whole is another way to distort the truth. This consists of what is commonly stated as everyone is doing it. While this may be so, it does not make the behavior acceptable. Next is creating information. Some individuals attempt to present a different version of the truth. This can be done by choosing to exclude some information that if known would have resulted in different opinion. Internal auditors must be careful not to do this themselves, and by looking at situations, problems, and even choosing recommendations from a biased perspective, the auditor could also introduce bias into the analysis and be guilty of this as much as auditees can be. So, criteria on presenting information to auditees, management, and the board of directors. So, first, verifiable. All results should be based on reliable facts, figures, and documents that others can inspect independently, and by applying the care and judgment of a reasonable person, arrive at the same conclusion. Second is transparency. When there is a legitimate need and authority to do so, the facts, figures, and documents should be available for review by others. And then sufficiency. The facts, figures, and documents used during the review should be enough to convince an equally qualified, prudent, and unbiased person. And then also the reliability. The facts, figures, and documents used should be free from tampering or significant and unexplainable quality variances, prepared by suitably qualified individual or system, and provided timely for review and analysis. Relevancy. The facts, figures, and documents used during the review should be applicable based on the scope of the review and the objectives of the organization, program, or process. And last is usefulness. The facts, figures, and documents used should help the organization, program, or process improve its operations and enhance its ability to achieve its objectives. And then developing useful, pragmatic, and effective recommendations for corrective action. The standards state that internal auditors must communicate the results of engagement. Reporting audit observations are a key requirement for internal auditors, and the board and management expect internal auditors to be their eyes and ears about what is happening in their organizations. They trust the accuracy, completeness, and timeliness of the information. Beyond identifying and providing a laundry list of problems, however, audit clients expect internal auditors to provide timely, useful, relevant, and visible recommendations. So these recommendations should help the organization restore the deficiency so it meets the performance expectations. It it can, however, help the organization go beyond the minimum performance requirements and propel it into the territory of leading practices. So by going one step further, competitiveness is enhanced and the organization perceives that internal audit is adding value beyond its baseline expectation. So that ends my report.